Imagine waking up in the morning, opening your phone, and seeing a message from an AI system saying, "Today the market may face pressure because investors are worried about inflation. Technology stocks are losing down, and global markets are showing weakness." A few years ago, this idea sounded like science fiction. Investors depend mainly on newspaper, financial reports, expert opinion, and hours of manual research. But today, artificial intelligence is changing the way people understand market. The stock market has always been a game of information. The person who understands information faster often gets an advantage. Every second, millions of data points are created around the world. Company earnings, government decisions, interest rates, social media discussion, news reports, investors' emotion, and global events, all of these things influence stock market. But the human brain has limits. A person can't read thousands of reports, analyze millions of data points, and trace every market movement at the same time. This is where AI enters the world of investing. AI is not a magical machine that can predict the future perfectly. It can't tell you the 100% accuracy which stock will rise tomorrow or which company will become the next big winner. But AI can process huge amount of information much faster than human and help investors make better decisions. This story of AI in the stock market is not about replacing investors. It's about giving investors a powerful new tool. For decades, successful investors follow traditional method. They study companies' balance sheets, revenue growth, profit, management equity, and industry trends. For example, if an investors wanted to analyze a company like Nvidia, they would read financial report, study the semiconductor industry, understand demand for chips, and compare the company with competitors. This process could take days or even weeks. But today, AI can analyze thousands of pages of financial document in a minute. It can identify patterns, compare historical data, and summarize important informations. This does not mean AI is always right. Markets are affected by human emotions, unpredictable events, and political decisions and economic changes. But AI can help investors see things the human may miss. To understand this change, imagine two investors. The first investor follows the old method. Every morning he reads newspaper, watch business channels, check company reports and make decisions based on his own research. The second investor use AI tools. He also study companies, but he use AI to analyze financial data, trace market sentiments, and find important trades. The second investor is not necessarily smarter, but he was a faster research assistant working with him. This is biggest impact of AI in a finance. AI has changed market analysis in the three major ways. First, AI help in data analysis. The stock market produces a massive amount of information every day. Company earnings, company reports, price movements, trading values, and investors' behavior all create valuable data. In the past, analysis had to manually collect and study the information. Today, AI algorithms can scan huge database and find connections. For example, AI can analyze years of stock price history and identify patterns. It can study how a company performed during previous economic slowdowns. It can compare today's market situation with similar situations from the past. This does not guarantee future results, but it helps investors understand possibilities. Second, AI helps in sentiment analysis. The stock market is not controlled only by numbers. Human emotions play a huge role. Sometimes a company financial results are good, but the stock price falls because investors expected even a better results. Sometimes a company faces negative news and a fear spread among investors causing price to drop. It can analyze millions of news articles, social media discussions, market comments to understand investors' sentiment. For example, if thousands of investors suddenly become negative about a technology company, AI system can detect this change quickly. Large financial institutions already use advanced AI systems to monitor market sentiment and risk. Third is AI help in risk management. Successful investing is not only about finding, it's also about protecting money. AI can help investors understand risk by analyzing market volatility, company debt levels, economic conditions, and other factors. For example, every investing in a company, an AI system can analyze: is the company revenue growing? Is the company carrying too much debt? The industry facing problems? Are investors become less confident? This type of analysis help investors make more informed decisions. One of the biggest example of AI influence on the market is the rise of technology company like Nvidia. Nvidia became one of the most valuable company in the world because of AI revolution. The company produced powerful graphics processing unit, also called GPUs, which are essential for training large AI models. When companies around the world started investing heavily in AI, demand for Nvidia's chip increased dramatically. Investors who understand this trend early benefited from Nvidia's growth. But how did they identify this opportunity? Many investors study multiple signals: the growth of cloud computing, increasing demand for AI services, investment by companies in data centers, the need for powerful computing chips. AI tools can analyze these trends faster by processing large amounts of information. For example, an AI system could trace thousands of technology new reports, companies' announcements, and financial data to identify that AI infrastructure was becoming a major market trend. However, human judgment was still necessary. An AI model could identify growth, but investors still needed to ask important questions. Is Nvidia's growth sustainable? Are competitors catching up? Is the stock market already too expensive? Can future earnings justify the current valuation? This shows an important lesson. AI can provide information, but humans still need wisdom. The future of investing will likely not belong to humans alone or machine alone. It will belong to people who know how to combine human thinking with artificial intelligence. Now, we talk about how AI analyze stock. Nvidia, Tesla, and Google case studies. When people hear the word AI, many imagine robots, futuristic technology. But in today's financial world, AI is already working quietly behind the scenes. Every day, millions of investors are trying to answer one simple question: which company have the financial potential to grow in the future? For decades, investors used financial statements, industry research, and expert opinion to answer this question. Today, AI has added a new layer to this process. AI can study a company from thousands of different angles. It can analyze revenue growth, profit margins, customer demands, market trends, competitor performance, and even public opinion. But the real power of AI came when it's combined all these information together. Let's understand this with real example. Nvidia. How AI help investors understand the AI boom. A few years ago, Nvidia was already a successful semiconductor company. It was famous for making graphics card using in gaming. But the biggest transformations came when AI started becoming a global technology revolution. Large language models, advanced AI systems, and data centers required enormous computing power. NVIDIA's GPUs become extremely important because they can handle AI calculations efficiently. How Now imagine investors trying to identify this opportunity early. They would need to study many different things: the growth of AI, the demand for data centers, investor investment by companies like Microsoft, Google, and Amazon. The semiconductor industry, Nvidia's financial reports, future demand for AI chips. This is huge amount of information. At AI, tools can help by collecting and organizing this information quickly. For example, an AI system can analyze thousands of companies' report and new articles to answer questions like how fast is AI infrastructure spending growing? Which companies are benefiting from the trend? How strong is Nvidia's competitive advantage? This type of analysis help investors understand the bigger picture. However, AI can't simply say buy Nvidia's today because investing is not only about finding a good company, it is also about price. A greater company can sometimes become an expensive investment if investors already expect too much growth. Human investors still need to analyze valuation, competition and future risk. This is where human thinking becomes important. Now, we talk about how AI is changing IPO analysis, the future of investing, and the human role. Every year, hundreds of companies enter the stock market through an IPO, which means an initial public offering for investment and investors. IPO create a big question. Is this the next great company or is just market excitement? This question has existed for decades. In the past, investors had to depend on company documents, financial reports, news reports, and their own research to understand a new company. But today, AI is changing how investment and how investors study IPO. Imagine a company preparing to launch its IPO. Before investing, a smart investor wants to know about many things like how fast is the company growing? Does it make real profit? Where its competitor? Is the market opportunity large? Is the company overvalued? What are biggest risks? These questions require deep research. AI can help investors answer these questions faster. How AI help in IPO analysis? The first area where AI helps is document analysis. When company launch an IPO, it release a large document containing information about its business, financial performance, risk and future plans. This document can contain hundreds of pages. For a normal investor, reading and understanding everything take many hours. AI can analyze these documents quickly. It can summarize important points like revenue growth, profit margin, debit labels, customer numbers, business risk, and competition. This does not mean AI make the investment decision. Instead, it helps investors understand the company faster. The second area is market comparison. A new company can't be studied alone. Investors need to compare it with existing companies. For example, if a new electric vehicle company launch an IPO, investors may compare it with Tesla and other automobile companies. AI can analyze growth rates, profitability, market share, customer base, technology advantage. This gives investor a better understanding of the company's position. The third area is investor sentiment analysis. Before and during the IPO, public excitement can't strongly affect demand. Sometimes a company becomes popular because of hype. People invest because everyone is talking about it. AI can analyze thousands of online discussions, news articles, and market opinion to understand public sentiment. It can't identify whether investors are highly optimistic or become cautious. But this is where investment must be careful. High excitement does not always mean a good investment. History as shows many examples where companies received huge attention during the IPOs but struggled later. A good investor does not only ask, is everyone excited? A good investor asks, Does this company have strong fundamentals? Example: AI and future IPO analysis. Imagine a future IPO of an AI company. The company claims it will transform the technology industry. Many investors become excited. The stock receives massive attention. An AI system can analyze the company's revenue growth, technology strength, customer demand, competitors, market size, financial health. But humans still need to ask important questions. Is the company actually making money? Is the valuation reasonable? Can it survive competition? Are investors paying too much because of excitement? This balance between AI and human thinking is the future of investing. Now, finally, we talk about the future of AI in financial market. The role of AI in finance will continue to grow. In the future, investors may personal AI assistant. They help them research companies, monitor portfolios, and understand market changes. Small investors may have access to tools that were once available only to large financial institutions. AI can make financial knowledge more accessible. A beginner investors may ask questions like: explain this company's business model, compare this company with competitors, summarize the latest earning reports, explain the risk in the simple language. AI can become a powerful learning tool. But there is another side of the story. More people using AI does not mean everyone will become a successful investor. Why? Because investing is not only about information, it's also about discipline. Successful investors understand patience, risk management, and emotional control. A person can have the most and best AI tools in the world, but if they make decisions based on fear and greed, they can still lose money. The biggest mistake people make about AI investing. Now, many people believe AI will become a perfect stock market predictor machine. They imagine a future where a computer can say this stock will rise tomorrow, but the reality is very different. The stock market is influenced by countless unpredictable events like a sudden political crisis, a natural disaster, change in government policy, global economic slowdown, and companies' unexpected problems. It is a combination of data, business of performance, human psyche, and global events. AI can improve decision making but can't eliminate uncertainty. Now, if we talk about if human intelligence plus AI could what could make the future of investing is not AI versus human. It is AI working together with human brains. Think about a pilot and an aircraft. Modern airplanes have advanced technology that helps pilot fly safely, but pilot is still responsible for important decisions. AI in investing work in a similar way. AI provide analysis. AI find patterns. AI save time. But human provide judgment. Human understand business quality. Human understand long-term visions. Human understand risk that number can't always source. The best investors of future will not ignore AI. They will learn how to use it effectively. Now, the final message for you. The stock market has always rewarded people who understand change. From newspaper to television, from computer to the internet, and now from traditional research to AI. Every generation of investors have gained new tools. AI is the newest and perhaps one of the most powerful tools ever created for financial market. It can help investors analyze companies like Tesla and Google, Nvidia, and many more. It can help study IPO opportunities. It can also help understand global market trends quickly. But the most important investment tool will always remain human thinking and human brain capability. Because markets are not only about numbers, they are about business, people, and innovations and future. AI can show up pattern but from past, but human AI means human intelligence decide how we use that information to build the future. The investor who combine curiosity, discipline, and AI may have the strongest advantage in the next era of investing. Thank you.